Hello and welcome to the Global View on this Thursday. I'm Andrew Gagan. Good to have you with us again. Let's see how we have set up from trade overnight on global markets. Investor sentiment remaining buoyant on hopes of further talks between the US and Iran. On Wall Street, the S&P 500 and Nasdaq closed at record highs. It was the highest close for the Nasdaq in almost 6 months and comes some 2 weeks after falling into correction. It was boosted by software stocks, while optimism also rose on a perceived strong start to the first quarter earnings season. Well, shares of Bank of America rose after the second biggest US lender reported growth in the first quarter profit, while Morgan Stanley rallied after reporting a jump in quarterly profit. Top three S&P 500 gainers were Robinhood Markets, DoorDash and Datadog. And shares in shoemaker Allbirds rocketed as it said it plans to pivot to AI computing infrastructure, rebranding itself as Newbird AI. Broadcom shares rose further following its extended deal to provide custom AI processors for Meta. Shares of Snap rose, with the social media firm cutting around 1,000 employees. And locally, Viva Energy will be in focus after a large fire broke out at the Geelong refinery. The Corio plant can process 120,000 barrels of oil a day. It's one of only 2 refineries still operating here in Australia. Well, the Trump administration says it's optimistic about reaching a deal to end the war with Iran, even as a US shipping blockade in the Strait of Hormuz remained in effect. The US has warned it could add secondary sanctions on buyers of Iranian oil in an apparent effort to gain leverage ahead of more negotiations. In the latest US data, import prices in March rose 0.8%, export prices up 1.6%, and the Federal Reserve's Beige Book showed that economic activity continued to increase at a slight to modest pace across most regions despite higher uncertainty. Meanwhile, President Trump has threatened to fire Fed Chair Jerome Powell from his separate seat on the US Central Bank's Board of Governors if he does not vacate that post as well when his term as Fed Chief ends on May 15th. President Trump's nominee to succeed Powell, Kevin Warsh, is yet to receive Senate confirmation. US Treasuries have retreated. The US 2-year yield rose to 3.76%. The 10-year was close to 4.28%. Australian 3-year government bond yields rose to 4.65%. The 10-year just below 5%. The US dollar index little changed. The Aussie has risen to 71.8 US cents. Oil prices have held steady as supply disruption concerns offset prospects that the war in Iran could soon be over. Brent futures just shy of $95 a barrel. The gold price has fallen, with spot gold down around 1% at close to $4,790 an ounce. Copper's up slightly. Iron ore also higher at 107 US a ton, and Bitcoin trading at around 75,000 US dollars. Let's get across those market moves. Ira Epstein joining us again from Linn Associates. Ira, welcome back. Good to see you. As often said, there's nothing more bullish than record highs. We've seen that on Wall Street. However, is this driven by hope and headlines rather than fundamentals?
No, it's driven by fundamentals. Basically what happened, I think it's very easy to understand from a layman's point of view. Forget all the experts. I'm not one of those guys in politics. But when J.D. Vance walked into the room in Islamabad and listened to whatever was going to be told him, he had a very short leash and he had a very, if you will, guided path. The path was what was going to happen with uranium. End of discussion. They could have started there and this thing could have lasted 2 hours. But the Iranians, their way of negotiating is something they've taught themselves for many years. And the idea is to talk around you, talk to you, lie to you, and then buy more time. This time around, it didn't work. When he left Pakistan within a day, within 24 or more hours of his arrival, they realized they're going nowhere with this. Then when the U.S. put on the sanction and made a strategic move to block the Strait of Hormuz, this is like a chess game. I think it ended it, and what I think has gone on now is I think you're going to be finding yourself at peace with the Iranians much sooner than you think. The administration today went out and told Iran the sanctions, now that we allowed people to buy oil. If they buy your oil, the grace period we gave is over right now. Same for Russian oil. So the whole pressure is on the whole world because Trump doesn't care. The world wasn't with him. They didn't help him. They didn't come to his aid. And now, if he wins this in the sense of getting a deal with Iran, I believe Iran will get uranium enrichment somewhere down the road. And I think that the other part that they have to do is agree to give up the uranium in the ground. Now, how that comes out, I don't know. Does it have to be U.S. forces on the ground digging it out with them? Of course not. But I think the market realizes just where I'm taking you. And with that, now you start going in and you're saying, well, when's oil going to flow? And I think soon, certainly by late summer. So I think that you're at a different game now. And the futures markets and investors don't wait for reality. They trade the future. And that's what's going on in my mind today.
Yet, do you think that bar has been set too high by investors, perhaps looking at those earnings that are yet to materialise, particularly given forecasts don't appear to be factoring in the growth slowing, inflation rising?
Well, let's look at the reports that we've had to partly answer that. We've had CPI and PPI in the United States. By any standard, they're still going up, but they're not going up the way that people thought they were going up. So we're seeing a slowdown in that. If oil can hover and get back basis Brent to the 84, 88 level, the market can deal with that for a while. The market can't deal with $130 oil, which we didn't get, but it could not deal with that effectively. It can deal with the other number, and it'll slide from there. I mean, let's face it, if the facts that we're all given are correct, the IEA says 80 some odd facilities were hit or destroyed in the Middle East. You're not bringing back all that oil or that refining capacity overnight. It could take 2 years or more to get that done. But there are also people that are very creative and they find ways to get oil out. I'm not talking cheating. They'll find ways to get it out. You know, give the Saudis credit. They invested money and they're getting 7 million barrels a day out of there. This war that just happened will cause those that have the means, the ability, and the ingenuity ways to discover other means to get their oil out as well. In the meantime, the U.S. is going to produce like there's no tomorrow because as a democracy, and that's what we are, as a capitalist country, once you can make a lot of money, you make that lot of money. Now, how can you do it without investing a lot of money in it is the question, and it's called technology. And with the technology we have, we can certainly get more oil out.
So, Ira, given earnings season just kicking off there, we've had a number of banks report. What have you seen there, and what are your expectations in terms of the strength of likely earnings growth?
Well, you know, let's not go bank by bank, but let's go with the group that came out. The earnings are great. The revenues are great. What didn't make it so stellar was the putting away of money by Goldman Sachs for private equity, that some of those deals may go sour, okay, but putting the money away for it is your insurance. If it goes bad, it goes bad. If it can be resurrected, we're not as bad. And the other part is, you know, seeing Jamie Dimon come out, and as he usually does, and I must tell you, as he usually does, he likes to put a damper on things and bring everything back to normal. And that's what's going on. But the economy is doing just fine. I looked at the U.S. today, the retail sales, the Red Book retail sales, 7% increase. We have been going up from 5.5, 6, 6.25, 6.5, 7 now, right through this war. The U.S. consumer is spending. In Europe, they're not. They're not spending the same way. All you have to do is look at LVMH, and you saw the problems that they had as they're under the pressure there. There's big problems at Kering with Gucci. That is going on. But I've started to cover Shopify. I'm covering Real, and a lot of these are doing a lot better than people think. So do I think the retail person is there? I think they have an appetite to be there. And I think that if we get to the point now where the central banks of the world, especially in Europe and other areas, start lowering interest rates, people are going to spend. And as they spend, everything comes back. So I think the worst is behind us. I think we're back into the bull market for 2026.
And Ira, just before we go, what's going on there with obviously that battle between Jerome Powell and President Trump continues? Where's this likely to land, do you think?
Where this is going to land is behind the scenes. They have to stop prosecuting Fed Chair Powell. That will get Tom Tillis, the senator who said that he will side with the Democrats, to not side with them. Kevin Warsh then gets approved, and instead of Trump having the deal for an unknown period of time with Fed Chair Powell, because that's what will happen, he can get his own man in there, whatever that means, and we'll see what happens. And the more he does this, he's liable to anger Powell so much that he just stays on the board to make him really angry, him being Trump. So what do I think? I think that that's how it has to end. What do you gain by going after Powell? In the end, nothing. Stop it. It's nonsense. Get your man in office.
Well, we'll see if he's listening to that. Ira, thanks so much for joining us on Linn Associates.
Thanks for having me.
Let's turn our attention to the local market then. Expecting a flat opening, as you can see, S&P ASX 200 futures there off by just 3 points. Of interest, though, will be what's going on in Geelong with the refinery from Viva, a fire overnight taking hold. Reports that is still burning, and that is going to have a deep impact on the already stretched Australian fuel market, given it supplies a good deal of not just refined oil for the automobile industry, but also for jet fuel and industry as well. We're going to get right across all that in the open in just a couple of minutes. Stay with us.